Are you a swing or position trader of stocks or options and want to learn prudent risk management strategies to preserve maximum gains? Last week we sent an email to our members showing the actual trades recommended in our advisory Market Edge letter over the prior 2 weeks. It produced over $21,000 of profits if you took a 10 lot on each trade. We periodically do have small losses, of course, but none in this period. In our advisory letter, we trade options, we swing trade stocks and ETFs, and provide education plus weekly market and sector analysis. Although we timely advise and document all trade management adjustments, we had many subscribers email us in amazement on our ability to find and manage them for incredible short-term opportunity. This should be a real wake-up call to those option traders who naively believe that chart reading produces no edge. So today I'm going to walk you through a number of these trades to explain the logic of the trade setup, whether it was a directional or income-producing trade, and discuss the master trader trade management steps along the way. Stay tuned. It's mastertrader.com. I'm Dan Gibby at Master Trader, and I've been actively trading options for over 25 years because I find them so much easier to produce income than trading stocks alone. I suggest you sign up for our risk-free $7 trial to our advisory letters if you're serious about wanting to make money investing and trading in the markets with trades like these. Today I'm going to show you the charts of some of these recent option and stock trades to explain our simple and objective approach to trading the markets and why using charts and time decay overwhelmingly stacks the odds in our favor for maximum profit. Because of the overbought nature of the markets and market internals, our management was a bit tighter than normal to preserve profits. But our approach does change with the bias of the overall markets. Okay, let's get started. First chart, Apple Computer, pull back to the rising 20 moving average on the daily chart. We bought a bull call spread, which is a mildly bullish directional trade. Bought it for $650, sold it for $820. That's $1,700 gain in 3 days on a 10 lot. Next one, ADS. We shorted the 220, 210 bull put spread for 70 cents a share, and we did that on this day right here. This is a bottoming. All these green bars and tails are telling us there's significant support here. So at the 220 area, we sold a put, bought an out-of-the-money put for protection. We closed it at 25 cents a share in the following day, in 1 day, and we closed that out for a quick $450 in 1 day. DK. We actually bought the stock on this breakout right here. It was a directional trade on the daily, weekly breakout. We bought it at $28.36. We quickly sold half for a $2 gain. We sold a quarter of it for $4.60 gain, and we're still holding the last quarter lot using trailing pivots using multiple time frames. Goldman Sachs. This was a topping pattern. So on this red bar right here, we shorted an out-of-the-money bear call spread. We took in 72 cents a share. Then it started acting a little bit more bullish right here. So on this bar right here, this bottoming tail that had no follow-through and took out the 30-minute high, we actually covered the short call, kept the long call open as what I call a lottery ticket, because it didn't make sense to pay commission to close the way out of the money short 260 call. So we closed the short call for a $650 gain, kept the long call open as a lottery ticket, and into this rally at the tip of this green bar with the overbought stock and market, we sold that for 48 cents a share, bringing our total gain to $1,130. And that's one of the adjustment strategies that we teach in our complete 10-module option strategy series course. Home Depot, we've been playing this one aggressively for a while, both with directional trades. So this bullish wide range bar had a bearish gap down, closed at the high, uptrend rising 20, 50, 200 on the daily chart. It was a breakout on the weekly and monthly chart. So we recommended not only a bull call spread, buying the 160 in the money call, selling an out of money $175 call. We bought that for $8, sold it for $12.60, and that was $4,600 gain in 10 days. Then the out of the money, we sold a 160 at the same entry point. We sold a 165 put, bought a 155 put to make it a defined risk trade. We sold that put spread for $1.30 a share. 9 days later, closed it for 15 cents a share, which was 88% of the max gain, making $1,150 profit on that trade. ICE on this green bar breakout. So this was a triple bottom, wide range bar, bullish 3-day consolidation, 4-day consolidation over these highs. We shorted a 67.5, 65 bull put spread for $500, closed it out 2 days later on this rally. It was up 2-day massive rally. So we made 70% of our maximum gain, made $350 in 2 days, and then we avoided 15 extra days of potential risk for being in this trade. So that's another prudent trade management strategy. If you can make the majority of your gains in a short amount of time, take the gains and go on to a new trade, new setup. ITW, this bullish breakout here. Now this one could have been a directional trade also because of the bullish daily and weekly breakout. But when it breaks out, we sold the 155, which is this put right here. And ladies and gentlemen, when we sell puts, we're getting paid premium just to call an area in the chart where we think the stock is not going, and we get paid for it. So on this pattern, we sold the 155 put. We bought the out of the money 145 put just for make it a defined risk trade and less margin. We took in $1.05 a share, closed it 9 days later for 20 cents a share, booking 81% of max profit and $850. IYT, this is the transports. We actually got in on this little breakout right here, a small double bottom retest above the rising 200 moving average. So we got in this bar, had to sit through a couple day consolidation, which is fine when you're selling option premium because we're getting paid day by day time decay. So we call that our income paycheck. So we sold the out of the money way the heck down here. The 167 put, we bought the 160 put for protection again and less margin. We sold that for 95 cents a share, closed it at 20 cents a share 9 days later, 79% max profit. That's another $750 gain. LRCX, we shorted the 195. So on this breakout here, this is $200, that's 190. So the 195 was way the heck down here. On the breakout, we sold the 195, 175 bull put spread for $1.55. And you can see it rallied a little bit, got sloppy, was underperforming the broader markets. So right somewhere, I forget the exact day, we closed the trade at 80 cents a share, booking 48% of our maximum gain and making $750, and we did not sit through any of this pain. Just even though the stock came all the way back down to our break-even point, we still made money because of time decay. Next, SEE. This was a breakout trade. Now that you can see it's pretty sloppy, but it was still a breakout on the daily and weekly, so we wanted a directional trade. So we recommended a covered call. That is buying the stock, selling a call against it. What that does is lowers our cost basis and improves our probability of profit. So we bought the stock on the breakout, sold the $47 calls. So we're capping our upside, but in exchange for putting money in our pocket. And we actually, on this rally, since we came very close to our maximum gain, we just closed it out early. We made $860 on that trade. Old Twitter, this is what we call a professional gap, moved up. Deep retracement, so we didn't want this as a directional trade, just chopping around here above the rising 20. But on this breakout bar right here, we sold the $19 puts, which here's the 19. Again, all we're saying is that we think for the next couple of weeks, this stock is going to stay above this support area. We bought the $17 put again, just to make it a defined risk trade. Sold it for 32 cents, closed it out at 5 cents, 84% of max gain in 9 days. We made $270 on that. Unum, UNM, a beautiful breakout trade. So this was a full-blown directional trade for us. We bought in the money $50 calls, and we teach this in our option strategy course. Directional trades, we want in the money. We also teach how to leg into using adjustments to leg into diagonals. We also teach all kinds of adjustment strategies based upon your trading time frame. This was just a swing trade for us. Bought the $50 calls at $4, sold them at $6.25. 9 days later, 121% gain in 9 days. That's $2,220 on a 10 lot. Finally, XNET, XNET, has been in a coma for many months, busted out on volume. This is what we call a master trader climactic sell setup, topping tail. Small bearish island reversal. So in this day, we shorted the $35 way the heck out of the money. Look, this is trading for $23, and we're selling the $35 calls, buying the $40 calls, making that a bear call credit spread. We took in 70 cents a share, and on the very next day, with this big bearish gap down, even though it's still, the trade looks fine, and you just have to sit in it if you want more gains, but we closed it out at 15 cents a share in 1 day, eliminating any further risk. We booked 78% of our max gain, $550 on a 10 lot. For our current Advisory Market Edge subscribers who would like to upgrade your subscription to an annual, we are offering a $200 discount on checkout. Use this code here, MTMoney5, and you get an annual cost for those existing monthly subscribers who would like to upgrade your subscription to the annual letter. Please use this code MTMoney5 at checkout for a $200 discount for the year, which comes with the monthly live meetings and, of course, our many great trade recommendations, letter updates, education, and the market and sector analysis. That's all for this video. Be sure to subscribe to our channel and our free chart of the week on the website, and test drive these advisory letters so you can learn how to make money investing and trading in the markets. And keep watching the videos here. We've got a ton of great information to help you learn our simple approach of generating wealth in the markets. Thanks so much for watching. Happy trading, and see you next time.